All right, welcome back. Happy Sunday. I just wanted to go over quickly kind of how I'm doing year to date, how the last week closed out. And if you don't know who I am, I'm Ben Collins. I'm a CFA charter holder, Chief Investment Officer, and founder of Options Autopilot, which is an automated options trading platform. And I'm going to kind of go over what I've been doing from an automated standpoint and also directional standpoint and how things are going from there. So I'll try and make it as quick as possible. Usually I say that to my girlfriend. Just kidding. But usually it is, a little bit longer than I would typically like. But I'm going to try and go through this real quickly and kind of just cover some updates on individual positions and then individual strategies that I have been doing so far. So if you saw the title, year to date, I'm up approximately 33.3%. I think that should actually be conservative because I basically just took the kind of, basic period holding return percentage based on my current account balance. But the actual accurate, I think, money weighted return would be higher. So I just wanted to go through this really quickly because if we go year to date, and I'll show you kind of how I came up with this. So $18,069 is the gain so far year to date. That's obviously excluding fees. But if we take that from an absolute perspective and kind of say, hey, 18,069, and we go in here, current balance is 72,218. So we divide that by 70. Oops, that's wrong. So 72,218 minus 18,069 equals 54,149. So we do 1869 divided by, what was that, 54,149? I don't remember. Yeah, 33.3%. So in reality, at the beginning of the year, I think I was trading with around $25,000 to $30,000. So my rate of return is probably a little bit higher. That's kind of beside the point. The return itself, while that's kind of all well and good, I think the more of the focus should be on just like how it's being achieved and maybe in general how things are getting combined, because it's more about like the risk management in the long term. But some things are finally kind of working out. So kind of quickly going through the P&L here, again, with fees, it's obviously less. And always keep this in mind that it's about $1,400 in fees, which is of course annoying, but that's just part of the game. So we can kind of see in general, I think crude oil, I'm probably about break even, a little bit up on crude oil. Again, these are all automated. I've automated the 111s on crude oil. If we go look at this real quick. So right now the only four I'm running, we've got the put spread on Bitcoin ETF. I think two of those positions closed on Friday, and then it opened a new one on Friday just because that's how I have it scheduled. The 111, I basically only have one open. It didn't open a second one last week because I have a bunch of money in SGov. So this was my own fault, and we're going to add in probably a sweep feature where it'll basically check to see if it's SGov, and you can set it to where it will, sell SGov to be able to put the position on. But in general, I've got about $50,000 in SGov. So obviously I'm in treasuries with a lot of the actual capital. And so because of this, the system looks at that as used buying power. So I didn't have enough buying power to put on a second ES position. I didn't fully correct that yet, but I will for next week, and I'll just have another one go on. So technically I would be up probably double this. But again, until Friday, that wouldn't have been a good thing. So that's just how things go at times where, 2 days ago, or I guess Wednesday, Thursday, obviously that would have been a bad idea. And then Friday, all of a sudden it was a good idea, right? But that's the whole point of automating some of these things. So you just take that decision making out of it. But because I missed it, I just said I was going to let it go on the next cycle. But in general, like I said, I just want to go over
quickly. Crude oil up overall, just letting it go automated. Same thing with ES, basically all automated. Gold, I'm up decently on gold. It looks like $1,340. But I don't have it going currently. I keep saying I'm going to turn it back on. I just haven't. I think MES, I'm down a little bit. Yeah, it looks like I'm down. Yeah, I'm down about $1,200. If this is correct, this seems weird. I'm exactly flat on that MES. So that seems a little strange. But either way, in general, I think that's around accurate. Bonds as well, I'm down on. Because again, I've just been letting it go, but bonds have been kind of volatile. Bitcoin, you can see I'm up. And I'm doing fairly small, positioning. I think I only have, let me look here, 3,000 allocated. Yeah, about 3,000. Well, 3,500, I guess, allocated now. And you can kind of see this win rate percentage. That's just selling the put spreads over time. Obviously, I think the market's upside potential is higher. I think it's flat to up, so that's kind of why all these are a good strategy to be running. I can go over my individual positions. Netflix was like an earnings play. That was kind of stupid to do, but it made some money. Same thing with NVIDIA. I don't know if I'll try and automate some of those things. I do think that you can make some incremental returns on earnings plays, and I have previously. But in general, I think they're just kind of distraction to longer term things. So I wouldn't mess with it too much. I think keeping with the asset classes and the indexes is probably better. We can obviously see down on my ARC position. I think in general that would have actually been up had I held it. But again, you got to follow risk management. And I am glad that I cut it at that point because I think it did get worse before it got better. But in general, XRP down $1,000 on that. Again, that's kind of a long-term play, what I think has the most convexity kind of upside. But we can see that SOFI is the big winner from a directional. These are the manual trades that I have on. Intel finally making a little bit of money. RIVN flat basically. And so I don't necessarily want to focus on, I'll talk a little bit about each individually, but I don't want to focus on like, oh wow, isn't this amazing? I want to focus more on how they're all working together. It's almost like, the automated ones should be more of the stable fixed income almost type passive income strategies. I don't have to do anything. The long-term ones, these are all leaps on Intel, Rivian, SoFi. These are just kind of long-term plays. You can see I have 845 days on all of them. That's literally the max that I could have gone. But if you've watched before, it's still the same kind of idea. I'm adding when I'm getting up, and I'm waiting until I'm getting up for sure before I start adding to the position. And that's been kind of a key, I think, to the success long term. SoFi, I guess we'll start with it. We can see that, I didn't add until Friday, right? So it gaps up here, and it seemed all awesome and great, and, I was up. Same thing with here, right? That's why I can fake you out, and you need to be kind of conservative before you add. You need to wait for the close. So this happened twice, that it was gapping up or opening up higher, and it would have been a new high, and then it's immediately getting sold off. So always wait for the close before you add to a position, because had I done that, I would have been hurt multiple times. And again, that's just what I've learned over time, to kind of always wait for the solid close, and maybe not just like barely a close over it, right? It can be a fake out. So ultimately, I think Friday was good enough. I did say that I was going to double my position when it closed over this. I didn't double it. I just added a few contracts to 15 contracts from 12. I thought about going from 12 to 20. I think depending on how next week kind of goes, if we make a new high here, I'll probably add then. Or I might add, and if it tests here and holds, I might add on that. I'm undecided a little bit, but I'm just trying to be, risk managed there, because it's pretty much all profit at this point that I'm risking, and that's why it's good to get up and then keep adding, at least with SoFi. So we can see I got 15 contracts on, strike is 20. I'm significantly in the money at this point. At a certain point, I'll probably roll it out of the money, or I might convert it into a spread. So follow along, subscribe. I'll update you as I kind of manage that position Rivian, not really doing much of anything, unfortunately. I wish. Do I have it in here? No. But again, I'm waiting until it makes another. I don't understand what's going on the weekends here. It seems to be messed up. So I guess we won't be talking about Rivian. Let's go to Intel. Let's see if this one's messed up at all. Okay. Again, in my opinion, Intel, it was a fake out. Was going up on rumors that the U.S. was gonna take a position. Then SoftBank came out and said that they were going to take a position. Now, in my opinion, SoftBank saying that they were gonna take a position is not necessarily a positive thing. If anyone recalls, SoftBank basically taking their positions in WeWork. I don't know. I'm a little bit skeptical of them actually doing due diligence, but I think in general, we kind of talked about news flow being positive for Intel. This is kind of how I'm seeing it play out. I'm not going to add to my position until, again, we get a solid, decent close over this level, $26 basically. That will be a confirmed bottom. And this is a pretty long-term bottom, right? And this is a pretty decent base. If you subscribe to any kind of technical analysis, I mean, in my opinion, fundamental analysis is key, but so the technicals will typically show a lot of this, and I think you can use it. And in this day and age with AI and just automated trading in general, they're going to go off of levels quite a bit. So it's like it almost becomes a self-fulfilling prophecy at that point. But in general, if you believe in this, basically the distance of this kind of base could be the extension above this base once it finally does close and resumes. And then the longer it takes for this to form is usually what people will say will make it more convincing when it actually does close, because it's touched this level multiple times. And obviously the idea is, of course, well, it's touching this level and it's getting sold off, so clearly the market thinks either fundamentally or technically the value at these levels is then over valued, right? So then it gets sold off again. So once it actually does close, that's the market kind of agreeing that maybe valuation has changed, expectations for valuation has changed, and that could set kind of a resumption of the trend. And I'm hoping that long term it recaptures new highs, but in general we can kind of see 26 down to 18-ish, so $8. So this could be 34 back up to 34, so in this range, so maybe back over to here. I think that's possible. So that's kind of what I'm playing it as. I do kind of think it was flagging right here, and maybe this is a decent amount of volume. But in general, I think Intel has lagged a lot of the chip stocks, right? So if it could somehow catch a bid and have more positive fundamental news coming in too, maybe you could get a pretty fast move to the upside and get a catch up to some of the other chip stocks. But again, remains to be seen. I'm keeping kind of a risk managed approach. I'm waiting for a convincing close above this level, and then I will add to the position. Rivian's similar, but I can't pull up that. I will go over one. I'm definitely looking at Google. Speaking of it hasn't been hated at all, because I guess I can't say that because now it's hitting new highs. But I mean, for a while it was just kind of sitting around here. It's now finally breaking into new highs. I think it again has good news momentum. I think they just came out, saying maybe Apple will use Gemini. Again, if Apple comes out and says, no, we're not going to, maybe it comes back off. But I think that there's seemingly some positive stuff building Google-wise. I haven't created anything yet. United Health Group, I'm actually thinking of putting a position on. These are just longer-term directional plays. Whether you dislike the company or like the company or dislike insurance, again, I'm just trying to potentially make money from the market that we have. Obviously, it seems like it's somewhat gotten some positive news, gap up and hold here. I think the news coming out about Berkshire Hathaway taking a stake is all positive. at least for the company, means they see value in it. I'm assuming this must have been when it got announced. I don't remember the exact day, but in general, probably means there's some decent value here. I will probably do some risk reversal trades where I'm selling puts and then buying calls just for planning on some upside potential. And I'll probably go out, as far as I am with the leaps. Implied volatility is 35%. Not terrible. It's just a matter of structuring this. You obviously get some pretty good premium. I wouldn't probably sell long dated puts. I'd probably do more short-term selling of the puts and then long-term calls. So probably how I'll play it at this point moving forward. Bitcoin, let's look at this real quick. Kind of status quo. Excuse me. In general, I'm just selling puts, right? And it kind of had a pop Friday, as with did a lot of things, but it caused a couple positions to close and then one new position opened. So you can see Bitcoin, these fills. So these two were profit takes right here. And then it was scheduled to run Thursday and Friday. And basically, I don't think it put on a new one on Thursday because I think I was at my max position, open. So system obviously working as it should. Didn't put new ones on. Now that it closed down to, there's space for new ones to go on. So got a $29 credit. That's times two because I'm doing 2 contracts at a time. So $58. And I think I have my max at 3 to 4 positions open. So that's working in general. I might size that up because I mean again, I'm just kind of playing the long-term play. Close down the bonds. Bonds will open again on Tuesday is when it's scheduled to run. And then obviously ES on the 12th opened. It's just what it did. Like I said, I didn't have enough buying power available because of my SGov position to have it open again last week, ES position. So I'll have to do that Monday. I'll probably sell some SGov and make some room for some of these others. Crude oil, this was a profit take. This was a new one getting put on. Same thing. This was getting put on as well. So all of this is working as correctly. These were profit takes, and I don't have to do anything. So, I mean, in general, it's good. We're getting steady kind of returns and successes on the automated side, and some of the directional stuff is finally starting to work. I think that if rates continue to decline, or now the market seems to think that rates are going to decline, there's probably a bid under the market a little bit, but I would just be cautious in general. I mean, it seems all well and good when one of these positions is working out really well, but the issue is that when you're leaning so far delta and it doesn't work out, then it sucks when it goes the other way, right? So I have had, like Friday, I think I was up about $4,000. That feels great when it's happening, but you always want to think about the other way because when things are down, I think I was probably down $2,500, right? So that's annoying the other way. So it's a double-edged sword when you're leaning so long and you're not just doing kind of direction neutral or kind of income plays. But that's where I think you should kind of balance them out, right? These are kind of my long-term directional market exposure. I may actually do some directional market plays on the index itself and then combine it with some of the automation and kind of show how that goes. But, we'll see. Definitely subscribe if you want to see that and see some more updates going on. Another thing I would say is if I get up more on SOFI or Intel, in terms of risk management, I'm going to try and work with Zach to program this in general on the system to where it can kind of like increase your position based on how profitable you are. That's always been an idea. We just haven't taken the time to put that in yet. But my thought is, let's say I get up, $20,000, or if I'm lucky, let's say I'm up $25,000 this year. I'll probably push on the gas a little bit in terms of the income plays. I don't want to go crazy because then again, if the market pulls back significantly or something happens at a year end, you don't want to give up a lot of that. But once you're up, it's like you're playing with the house's money. Similar to like blackjack, where you're just kind of stacking when you win and you drop down when you're losing, and you just go back to one risk increment. It's you can definitely accelerate your returns, but you always want to be cautious, right? Because if you're always leaning, directionally long, and then the market falls, that can hurt. But the other way, right? Markets go up theoretically 2/3 of the time. I think I saw a statistic that I thought was interesting. I need to try and find it. It was something like, if markets are hitting new highs and the Fed cuts rates, it's higher a year later 20 out of 20 times. Now, I'm always cautious on those types of statistics because it works until it doesn't, right? So always keep that in mind, but it does favor the potential for the market to be higher. I want to say, I don't remember, I don't want to misquote it, but I think they were thinking, average return 15%. Either way, for us, even if the market's higher a little bit and we're selling puts, for example, they will expire, right? So if that's the general direction of the market, and that's kind of the backdrop we have, again, we trade the market that we have, not the one we want. I think all those things are kind of interesting and good to just have in your mind, because in general, it's a favorable environment for stocks. For SOFI specifically, again, there's a lot of sayings that I've picked up, or you hear over the years, like the S&P 500 can't swim without its fins, meaning its financial stocks. I don't know if that's as true these days, but you can see that the XLF, this is the financial sector ETF, making new highs. That's lining up with SOFI and probably a bunch of other financial stocks. So again, if the financials are starting to move because rates would be coming down, and it ends up being helpful for net interest margins or whatever on the financial stocks in general, that should again maybe point to a continuation of everything moving up. So that's pretty much the quick one. Hopefully I made it quick enough, in how I'm up approximately 33% year to date. I'm hoping that this will continue. In general, I will update everyone, so definitely, hopefully subscribe, like, share it with someone who would find this interesting, and just always manage your risk out there. Don't go crazy, and that's why I think it's helpful to kind of have the systematic stuff in with the automation, and then maybe you do a couple of complementing opinions, or even long positions that are directional. So that's how I'm doing it. Appreciate you guys watching, and we'll talk to you on the next one.